Welcome. My name is Johan Taljaard. I'm one of the partners at Aurik, and I'm here to welcome you, and I'm here to introduce the speakers that we'll have today. We're going to split it into two. The first half will be Marley from NYFTI, and after that we will have Ruan from Aurik, and at the end we will still make a bit of time for the questions. So if you have any questions that pop up during the time that they speak, you're welcome to put it in the chat function at the bottom of the screen. If you have questions that you want to just ask afterwards, instead of typing that, you're welcome to keep that question. At the end, we will make time and we'll spend time to go through those questions if there's anything that pops up at that time. Okay, so let's get started. The first one I want to introduce you is the topic of technology. All of us know that if we don't adapt technology, we probably get left behind. This goes right across industries. But if we adapt technology, it often causes more headaches than any joy. So it's finding that balance between the two. Now, Marley is an expert at understanding those headaches that technology causes, firstly. And her business, NYFTI, has become the specialist in application integration for technology to make business better, not just for accounting firms, but also for the clients that accountants work with. So NYFTI, Marley from NYFTI, it's over to you.
Hi, everyone. I see some familiar faces, so hi to all of you. Let me just quickly share my screen here, and then we'll dive into it. Okay, can you guys see my screen? Cool. Okay. Okay, so those of you who don't know who NYFTI is and why we're here, I'm going to explain that, so don't worry. So my name is Marley, and I am the founder of NYFTI, and we work in the tech space and also in the accounting tech space. So I'm going to explain a bit more as we go along. So first of all, the topic of discussion today is mainly focused on the South African accounting practice and the challenges that we see with the average South African accounting practice. So we're going to share some insight with you in terms of what we've experienced. So first of all, you probably want to know who we are. So we are app integrators. So app integrators is just, it basically refers to software integrators. So softwares talk to each other these days. So we specialize in the flow of data. We specialize in building those software solutions for our clients and automating all of that. But like Johan said, it also can cause a bit of headaches. So we're going to go through that in detail today. And we also specialize in the flow of data. So I think that's one of the most important things that we try to communicate as well to our clients. We can't just focus on functionality of software, but also on the data of the software. Okay, so what do? We use integrated technology to automate and optimize business processes, to extract valuable data and reports, to assist business owners and CFOs to make informed business decisions. So that's in a nutshell. Cool, so let's dive into it. Why are we here today, and why do we think we have an opinion to tell you more about accounting practices? We work with a lot of data. We work with a lot of accountants. So we are a Xero approved app integrator partner, and we're also one of the preferred Xero practice manager implementation partners. So if you are a Xero accounting partner, you would know these terminologies by now. If you're not, Xero Practice Manager is a software that Xero makes available to their accounting partners so that they can manage their practices. Okay, so we work with a lot of data. The whole purpose of this discussion is we would like to share some insight with you about what we have learned from working with all this data and all these other accountants, in the hope that you don't have to make the same mistakes. Cool. So what we will be talking about, we're going to take a look at some of the challenges that we observe in South African accounting practices. We're also going to have a quick discussion about the switching to digital clients and how to adapt to the technology. And we're then also just quickly going to take a look at the Xero digital accounting practice tech stack in South Africa. So when we refer to a tech stack, that's basically just all the integrated software that we use to fulfill certain purposes. Cool. Okay, so challenges that we observe in the modern day South African accounting practice. I will dive into each of these points and give some real life examples and case studies on each of these. But in a summary, we see the following concerns. So lack of capacity, skills and resources, internal and external attitude and commitment to change, your staff and your clients being hesitant to change, adapting to market requirements and client needs. I think you're all with me in the sense that client needs change as technology change, etc. So we just want to dive into that as well. Understanding and considering the bigger picture, lack of quality checks and controls to ensure good quality data, and pride and ego. We all struggle to admit when we're wrong and when we don't know something. So that's one of the big challenges we also see, and a lack of knowledge transfer. Okay, cool. So let's take a look at the first one. Charity starts at home. Okay, so we are also in the service industry, and I think one of the biggest challenges the service industry face is that we are always working on other people's businesses and we're neglecting our own. So we want to encourage you to start at home and only then assist your clients. Okay, so shortage of capacity. So it's a little bit of a cycle. So you guys might have been here before, you might have experienced the same. So what tends to happen is you don't have time. You don't have time to standardize, to automate, to migrate to a new software. You don't have time. What ends up happening is you don't standardize and you don't automate and you don't optimize. You end up with no time. So I think the point is there's a cycle, and at the end of the day, the only thing that happens is you get demotivated. So we want to try and break that cycle. And I think what we're trying to encourage you to understand is that you decide what you spend your time on. So sometimes if you want to implement positive change into a company, you have to make the time. You have to set aside time and prioritize the time. So just an example of what we've seen. So I have an accounting client that makes use of invoice books, and they still track their work in progress on an Excel spreadsheet. And every time there's an intention to move to a new system, but there's never time to complete the migration to the new system. And this client will probably never have the time because they're not prioritizing the time to move to a new system. Okay, then we have lack of commitment. That's also a bit of a cycle. So what tends to happen is there's a good intention. You want to start something, you begin, you don't finish it, you lose interest, you restart. And by the time you restart, you've lost all motivation again. So that's also one of the biggest challenges that we've seen. And we just want to also say that if you change management is not just it's not just psychological, but it is also psychological, but there's definitely something to it. And if the directors or the top management does not adapt to the new processes, then the staff will not do that either. So it's a top-down approach, and I'm going to give you some examples of what we've seen. So we have, for example, an accounting client that likes to move to a new accounting system like every 3 months. And at the end of the day, what tends to happen is the staff don't adapt anymore. They're just like, oh, we're going to move to a new one in any case. So, why learn this new software? So at the end of the day, that's one of the biggest challenges that we see. And at the end of the day, you have no progress and no change. And then another challenge that we also find is, see, I'm also a director and in senior management, and I understand that time is very difficult to find, and you always feel like you're wearing so many hats. But what tends to happen also is directors and partners are not involved in their own software migrations for their internal practice. What tends to happen is you have staff members that then champion those projects and they understand the software, but then that staff member leaves the company and you don't know what's happening in your own business. So it's also important that you, as a managerial staff member, is aware of what's happening within your business and with your software. Okay, lack of willingness to adapt. So we have a few different scenarios. Sometimes we have accountants that want to adapt, but the business owner doesn't want to. Sometimes we have business owners that wants to adapt, but the accountant doesn't want to. Then often we also have those senior members, sitting at the top of the food chain, and they close to retirement and they just have no desire to change. So all those things can cause barriers to these changes, especially with technology. So just going to give you some few examples of where we've seen this before and the challenges that our clients face. So we have, for example, a retail client, and they're making use of Xero accounting, Sin7, which is a stock management system, Shopify is an e-commerce system. So they have that tech stack, and the accountant is not willing to learn the new software. So they are actually going and recapturing all the data in Pastel because they don't understand the data and they don't want to learn the new processes and the new system. So what ended up happening is the client found a new bookkeeper and a new accountant. So those are the kind of things we need to look out for. So if we don't adapt, what's going to happen to our client base? Okay, and then understanding the bigger picture. So it's very important that you don't just think about the small little bits and pieces. So if you, for example, integrate an e-commerce software to your accounting system, but not to your stock management system, what will happen is you will not have the correct stock movement. The same happens if you raise an invoice in the wrong place. So you always need to make sure that you understand where the data input takes place. So as an accountant, it's very important for you to understand the data flow of the systems and whether your clients are using it correctly. So you have to look at the whole picture. You can't just look at the parts. So the bigger picture is greater than just the sum of the parts. You need to understand that flow and how important that is. Okay, and then lack of quality controls and quality checks. So we have a lot of challenges when it comes to quality controls with data. So the data that you submit to SARS as an accountant, you take accountability for that data, right? But the challenge that we have is it's no longer just dependent on the user input. We also have software, third-party softwares that input data into your Xero accounting, for example. Then what happens at the end of the day is you're signing off on data that you're not even sure is correct. So this is something that we find a lot. So quickly going to give you guys a few examples. So we have a retail client that's on a point of sale that's not integrated to Xero. The Xero reports are on a cash basis. They just cash coding the bank statements. Their point of sale reports are on accrual basis. They have no controls to make sure that their Xero and their point of sale is saying the same thing, and no quality checks. So they have no idea what data to trust. And if they want to go and apply for a loan, if they want to submit anything to SARS, what data is correct? They have no idea. Okay, so those are the kind of things we need to look out for. Okay, then the pride and the ego is something we don't often want to talk about, but we all have it. So it is sometimes just difficult to admit that you don't understand something or that that's not your skill, or to ask for help. And I know I have a lot of pride as well. So I think none of us are excluded from it. So what I want to encourage you is to make sure that you ask for help if you need help. So admitting when you make a mistake, we've all made mistakes. We learn from those mistakes. And that's at the end of the day, what we're trying to achieve is to make sure that you don't make the same mistakes that we've made or our clients have made. Cool. And then also communication, client expectations. I think it's very important to communicate. So if you know you're going to miss a deadline for a client, it's essential that you communicate that. It's better that you rather communicate than not committing to a deadline, and then at the end of the day, the client is late or upset or something. Okay, and then teamwork. Use your team. Don't try to do everything yourself. Don't try to climb the little ladder all by yourself. So just an example of what we've seen. So we have an accountant, for example, that didn't understand the software. What ended up happening is the business owner learned the software, and then from learning the software, they suddenly started to understand their data, and then they realized that the accountant is not treating their data correctly. So that also happens, and that's not something you would like to happen. And then also knowledge transfer. We see a lot of a lack of knowledge transfer. So people are very scared of sharing information. So it's sharing of intellectual property. And people are scared that if they teach their clients how to understand data and how to do their own books, for example, that they are going to, at the end of the day, not need you anymore. So I'm of a bit of a different opinion. So the client will not necessarily stop needing you, but their needs will change and you will need to adapt to that change. So you will always be the accountant. Yes, maybe they'll start doing their own books and they'll become their own bookkeepers, but that gives you the opportunity to be more of an advisor. At the end of the day, you sit with less admin, more value, better data, and growing clients. And that's at the end of the day what we would like to achieve. Cool. Okay, the Zero Digital Practice Tech Stack. So this is just for accountants. So this is basically the software that Zero has made available to South African accountants and to assist the South African accounting practice to manage all the internal workflows and deadlines, etc. So I'm just quickly going to jump into what happens here and how to understand this very intricate diagram. So basically, you can see there's data input listed over here. So again, the data input is very important. We can't raise a certain invoice in a certain system if it's not the correct place to do so. So we need to follow the data trail. So in essence, what this document tells us that the payroll data input takes place at in PaySpace or Simple Pay. So Zero doesn't have their own payroll software in South Africa that's compliant to the South African laws. So they've partnered with PaySpace and Simple Pay. And then through Simple Pay, you can then do your payroll submissions. It sends a journal to your Zero, so your salary journals are there. And your EMP 201 is automatically submitted to SARS, which saves you a few minutes, but a few minutes for every client. Every time you do this, it all adds up. And then we also have IRP6 submissions that can go directly from your gatekeeper to SARS. And then we also have the VAT 201 submissions that can go directly from your Zero to SARS. So all of these little things make your life a little bit easier. It's small things. If you're not familiar with the Zero Tech Stack, HubDoc, this is a document management system where you can take a picture of a slip and load it up to your Zero. This is something that's free for anyone who uses a Zero standard package or not. So anyway, these are the small things that Zero has done. And we specialize, if you haven't realized it by now, we specialize in the Zero tech stack. So all the software that integrate to Zero. And then also Zero recently acquired Sift Analytics, which is a BI system. And that is ideal for reporting and management accounts to better assist you and your clients. Cool. And that's us.
Thank you very much, Marley. It's one of those things where you can see that there's a lot of value, but there's also a lot of complexity. It's one of the hard things to get right is to get technology up to date in your business. So everybody, if there are any questions, please pop them in the chat or keep them for later. We will have some time for questions later on. Marley will stay later on. Okay. So the next part of the session, I'm gonna introduce Ruan. Now, this is all about business growth. Business growth is often a term that's used, and it's not always clear what it means because it can mean so many different things for accounting firms, different things for different businesses and different business owners. But there are clear things that keep certain business owners from achieving that business growth, and there's often stumbling blocks that they have to overcome. That's part of the topic that Ruan will be discussing. And Ruan specifically comes from a background of working with a range of different types of businesses for years and years. And some of these businesses thrive and some don't. And the perspective that he brings today is that some businesses are getting it right and others are just not. And there's a lot of learning through that experience. So Ruan, it's over to you.
Okay, thanks, Johan. Can everybody hear me? Got it. Let me just share my screen quickly. There you go. Can you see it? Thumbs up, Johan. Got it. Guys, yeah, so I'm Ruan Vivier, and to be more specific, my role at Aurik is I work in partnership with the Aurik Investment Committee. We have an investment committee because if we work with a business, we link our fees to the impact we have on this business and on its growth. We don't work with everyone. We need to see we can help them. And that's put us and me in a privileged position, as Johan said, over the years to get perspective on what makes and breaks businesses, products businesses, and services businesses. Right, so who is Aurik? What do we do? And some of you guys will probably know us from the media. We're fairly well known in this country, and we're a business accelerator. So we work with established businesses and with their owners to increase the value of these businesses and to free up the time of the leadership team so they can spend more time on strategy and for the owners to actually have a bit of a quality of life and to build their businesses so that they are ultimately sellable assets and not just a job. And we've been around since 2005 and over the years worked with more than 3,500 businesses. So it's a very privileged position to see the patterns that emerge from different businesses. And to give you an idea of the kind of impact we have in terms of revenue growth, on average, our businesses have seen 28.9% growth in revenue and EBITDA growths of 32.4%. This is the average. So before we get into all of this, I actually want to take you back to Rome, 117 AD. And this is a great story that I heard in an interview last year. And this is the Roman Empire at its peak. These are all the different Roman territories. And there up in the corner above Britannia, that's Caledonia, modern day Scotland. And the story goes the history goes, for 300 years, the Romans tried to take that territory and they just couldn't. And the historians have a couple of explanations why that was. But one of the most interesting and dominant explanations is this. It's the naked locals. So what happened is the local Celts knew they were completely outgunned. They saw that the Romans had the best technology, the best helmets and armor and the best sandals. And these aren't things they had. And they decided that their weapon was going to be their heart. They were going to show the Romans that they were wild and uncontrollable and they have fierce fire in their hearts. And for 300 years, they showed up to battle again and again naked. All they wore was a torque. A torque is I googled it, it's a bit of a sort of a rope necklace. And they would, of course, have a shield and a sword. And all of this belief and conviction ended up being completely overwhelming to the Romans. The Romans didn't know what to do with these naked locals. So they held Scotland for 300 years and they kept the Romans at bay. And actually, before I go into this slide, the thought that popped into my mind with this is it's that vision. I'm thinking back to the times I've started businesses and the kind of conviction you have when you set out in business and you have a vision of something you're going to achieve and you're fired up to win the odds. And of course, throughout business, we don't always feel like that, but we always need to work at getting back to an exciting vision, not just to survive, but to thrive. And I certainly hope after the holidays, you guys that might be feeling a bit tired after a year will come back with new energy and a concrete vision of what you want to achieve. So here's what we're going to talk about today. Firstly, we'll talk a bit about growth and where that comes from. And then we're going to share a bit about the biggest problems we at Aurik have seen in businesses repeat themselves again and again and again and again. And then, of course, we'll give you a practical business case. And finally, I want to touch a little bit on client lifetime value. And there's an opportunity for us to partner up as well to help you guys get your client lifetime value up and help your clients to do better. So that all sounds really simple, but right, where does growth come from? And actually, there's only three ways to grow a business. And the first would be, let's get more clients. Let's get some new clients. The second one would be, let's increase the number of transactions per client. And the third one, of course, is let's increase the average value per transaction. So the last two, that means customer or client lifetime value. That's not rocket science. And at this point, it's probably good to reflect for a second and ask yourself, what is my client lifetime value? It's no accident that the best businesses have proactively built strategies to measure and increase their client lifetime value. It's such an important element of growing a business. Now, as I said, there's an opportunity for us to help you guys with that, but we'll get back to that later. Right. What are the problems that prevents a business from achieving these things? And here we go. There's four problems that, as Aurik, we've seen again and again and again show up in business. And the first one, probably the biggest one, is businesses aren't proactively built to be sellable. If you look at the stats, 94.6% of businesses built fail to exit one day. These owners get into the thick of it, and before they know it, 30 years have passed, 40 years. They're tired and they want to try and sell their business, and it just doesn't reach the value they want to. They end up selling for pennies on the rand. They sell the stock in the warehouse at a discounted value. And it's not a great outcome for the owners, for the employees, for the economy. It's just a sad day. So that's part of why Aurik exists. We help the business owners to get that part right. Secondly is, excuse me, businesses become stagnant. They figure out something that works and they try to ride that train and they don't adapt with the times. And at some stage, they probably find themselves either not growing at all or their costs are growing at the same rate as their revenue. You guys know the problem with that. You end up growing yourself broke. It's stupidity. So we help to get that right. The third problem is, of course, the classic one of what happens when sales take off and suddenly chaos and complexity is coming to you from all directions. You used to be a 15 million rand business and you could, flip open the rocks to see what's going on underneath. You could crack the whip, but now you're doing 25 or 30 or 50 or 200 million, and it's just not possible for you as owner to go and address all these things yourself. And so that's something Aurik gets right to say, how do you build a business so that it can scale and always scale in profitability and always be simple? And the final problem that we see is with succession. This slide here speaks to family succession, but one can actually throw management buyouts into that box as well. The statistics say that 27% of succession handovers from first generation to second generation actually work out. So 73% of the time, businesses falter at that point. And it's mainly because it's so difficult to get the intuition and the know-how that these owners collected over the years to get that distilled into the playbook and successfully handed over to the next generation. Mona is on the screen somewhere here. Mona, you can correct me on the stat, but from second generation to third generation, it's about 5% success rate. So I'm seeing one nodding, so I've got that stat right. It's a tragedy. Why aren't business owners successfully handing over? So, right, these are the problems. Now let's make that practical. Let's go to a story. And the story that I've chosen here is a story about a commercial baker. Why? Because everybody loves a good croissant. And this is a business that we worked with quite some years ago. We call him Jack. No, it's not his real name. We just protect the family identity. And no, that's not Jack, actually. That's just the random hipster I got off the internet. But this commercial baker came to Aurik and he said, guys, I'm in my 50s. I'm doing about 54 million in turnover and I'm burning out. I'm just not enjoying this anymore. Please help me to get out. Please just help me to sell this business. I don't want to do this anymore. And then Aurik looked at the business and the first thing we saw was, Jack, you don't have a sellable asset. You're going to get nothing for your business. Let's make some foundational changes that will actually get the value up. We're not just going to put lipstick on the pig. That doesn't work. And then over a year or two from now, you'll be in a much better position to get a happy retirement out of your business. So we took his business on. And here was the first big problem. Jack had his commercial bakery and he was supplying freshly baked goods to the hospitality industry. Then Jack was importing and distributing ovens. Jack was buying flour and breaking the bulk and supplying it to other bakeries. And in addition, on top of all of that, Jack had some delis around town. Now, at a superficial observation, one might say, well, it's all related to the baking industry. Why not? The truth was, these were completely different businesses with different positionings and different clients. And if you try to be everything to everyone, you end up being nothing to no one. You have to get your focus right. And so that's what we did. We said, Jack, hold on a moment. Who's your ideal client? Let's identify who's your golden goose. Where's your most juicy, most profitable growth going to come from? And through some work we went together it became really quickly really clear that the hospitality industry was the place to go. And so, sorry guys, just a wave there. So the hospitality industry was the focus area for Jack and his business, specifically hotels. Right. Then Jack, a bit emotionally, got rid of these other sideline businesses. He doubled down with his limited budget and time on the hotel industry. And the sales started to grow organically, not super exciting, but he was starting to see some healthy growth. And the next phase was then to say, right, Jack, you don't just want survival growth. You want exciting growth. We want to make this business really attractive to buyers. So let's understand the buying journey better. And Aurik worked with him, and the first thing was to say, Jack, when your team walks into that hotel, who are they trying to sell to? And Jack said, well, it's of course the food and beverage manager. Then we said, okay, what does the food and beverage manager care about? After we've gone through that, we said, who else might there be behind the scenes that also has a say in this purchase decision? And it turned out there were three other decision makers. There was the health and safety guy, the HR guy, the finance guy. Each of these different decision makers had different pain points which kept them up at night, different metrics that if they could nail that, that would make them look good in front of their bosses. And so to give you one example, finance, for instance, said, I can taste Jack has great croissants, but if we buy our croissants from Jack, it's going to mean that I need to employ 2 additional people to go wait by the kitchen door at 5 a.m. in the morning and to receive and keep these goods warm and fresh for the guests when they wake up. I have 100 hotels across the country. So in effect, what you're telling me is simply because we're buying croissants from Jack, I need to employ 200 people, and that doesn't add up in my numbers. I say, no way. We're never going to buy from Jack if that's the case. So this hidden objection was preventing Jack's deal years and years and years, and he never knew about it. The moment that was clear to Jack, he could solve that problem by bringing freezer to oven technology to South Africa. And yes, it's thanks to this Jack that Woolworths now is able to deliver us croissants, and many of the businesses in the country runs on the technology that he introduced. And so the effect was he could deliver a truck of frozen croissants once a week, and when they needed it, they could just pull it out of the freezer, warm it up, and it was as fresh as if it just had been baked. So the moment that was solved, the deal started to come through, and there's more things we did along the way, but it was the incredible pivotal point in the success of this business. And here's a summation of the results we achieved. You know, over the period we worked together, his EBITDA grew from 12.4% to 19.6%. Valuation shot up from 37 million to about 322 million. And today, it's now about 18 years later, that business is valuated at roughly about 1.15 billion rand. And it's still in the family. Jack never sold that business because he found his time released from the engine room, was able to succeed to his children, and they've been running with a show since then. Apparently, the family is considering going to market today. So, okay, now you're saying wonderful, warm and fuzzy story, but what does this have to do with me as a professional services accounting business? And this is a very common misconception that we've encountered over the years. Services businesses and often accountants say, guys, we're a services business. The way we grow is we deliver a great service, and through word of mouth, new customers will come to us. They'll come flogging into the door. We might do some Google ads, but service businesses don't hunt. We can throw out a fishing net, but that's enough. You'd be correct if you want to compete incrementally. What we've seen is the businesses that follow that strategy struggle to keep their head above the competition. They struggle to stay head above water. They never swim towards the tropical island. And there's a reason why the big four today have become the big four. They very early on identified exactly who are their most ideal clients. Yes, the market might be worth billions, but we're never going to dominate the whole market. So let's find our niche focus. And they found out who are their most ideal, profitable, juicy clients and made it their business to become the best in the market, to proactively start conversations with those ideal clients and to resonate in a way that no one else could. So in other words, they got their positioning crystal clear. And to get your positioning crystal clear, there's a few questions one can ask oneself. And I just want to stimulate and feed your brain here. You can run through this. First, really big, and this is the money question. Positioning says, what problem are we solving? For who specifically? Yes, the market is worth billions, but many of them are rats and mice to us, and we can't resonate with everyone. We want to find our niche and be known as the best to solve that problem for that niche. And through what experience do they want to go in the way that we solve that problem? In the way that they come to hear of us, and the way that we sell and convert them into paying clients, and the way that we delight them afterwards. So that's getting your positioning right. Once you've got that positioning and focus right, you need to ask yourself, what makes us special in the eyes of our clients? If we get a coffee with them, why would they want to work with us as opposed to the other thousands of accounting practices out there? Another question to ask yourself, as I said with Jack, who are the other decision makers behind the scenes? Who has a say? Maybe his wife is a decision maker. She's not a shareholder, but he certainly has a say in his business. And what matters to her? How do you resonate with that? What keeps them up at night? And where can we target them? You know, some people you can just reach on an email campaign. Other people you need to go hunt at an event. Different people and different kinds of people are different kind of platforms, and that's all baked into your hunting strategy. Now, let's say you get really clear on an effective positioning, and this will separate you from the competition. Then you can't just sit back. You need to actually build out the engine to go and harness that promising positioning, the business development engine, or one might say the marketing and sales engine. Or at Aurik, we like to call it the lead generation and lead conversion engine. That's the function of marketing, to generate leads, and the function of sales to convert those leads into paying clients. Now, when I say a lead, I, of course, mean any potential promising on-point client, someone you want to work with and that's going to be worth your while. That's a good lead. So here's some food for thought. Excuse me. 80% of deals, according to the statistics, are closed after the 8th to the 12th touch point. Now just think about that for a second. How often does it happen that us as business owners or our business development team speaks to a potential client and both parties have a really great conversation? The touch points are there and they say, well, the key points are there and they say, this feels great. We really should do some business together sometime. Then they go their separate ways after that meeting and life gets in the way. There's a fire at the office, or the goods get stuck in customs, and this is an incredible important emergency, or your client's app integration breaks because he's been holding on to old technology and now you're sitting with bad data. These things happen. And what ends up happening is the clients don't get 8 to 12 follow-ups. And moreover, when that salesperson follow up, that he or she hasn't kept meticulous notes of what were the pain points in that client's universe, what was going on, so that when they make that call again or they send that email or that WhatsApp, they can say, John, how's your daughter in Paris in the studies? Is she enjoying this new direction in her life? How's that new lathe that you bought for a business? Are you happy with this technology that you installed? In other words, it's not always a quality follow-up. You're not getting back to the core issue and the emotional points around that to make it a quality engagement. And the end result is a heap of money is lying on the table and it could have been yours You've just never claimed it. Just because you don't have a really good follow-up sales process, the right activities that happen at the right time. So here's some questions to ask. Ask yourself concretely, do I know how many new leads I've been generating every month? Have I done better this month than last month? Are these quality leads? Am I just thumb sucking here, or do I concretely measure this? Secondly, have I been getting better month after month to convert those leads into paying clients? So what's my lead conversion ratio? Can I concretely see that the percentage is going up? We're getting smarter and better at selling, or we're generating higher quality leads. And then, of course, how are you measuring all of this? Are we just using an Excel table? Or, do we have a proper CRM that's able to give us really good reports? And are we actually engaging with those reports and holding our sales team accountable to that? These things make a massive business difference in your growth. And as I said, 80% of deals are waiting for you. You probably could have had them by now. So growth is great, but what if you don't have capacity? And I feel for you guys, because the truth is, in South Africa, the accounting industry, according to SAPA, has about 20,000 skilled shortage. Now, okay, don't feel too sorry for yourselves, because in all industries we're seeing a skill shortage, and from our work in Europe and the US, we see the same things on that side. The grass isn't much greener on that side. But I have a ray of hope here, and the hope is, consider the size of your industry. Now, accounting, bookkeeping, auditing, tax. In 2023, that industry generated revenues in excess of 30 billion. So it's a massive industry with a workforce of 56,000 professionals. Someone else is doing all of that work, which means they are out there. The question is just, how do we get them to come and work for us? And how do we get hold on to them? And how do we keep them purpose-driven and motivated? And the seed I want to plant is, this is not what accountants look like. This is a Google Shutterstock image. This is an example of a real accountant. This particular individual, some of you might even know, his name is Willem. Willem runs 5 to 10 kilometers every day before work. And on some days, he shows up at the office in a Batman t-shirt. And Willem is incredibly good. Unfortunately, sorry for you guys, he's not available because he's busy building his own practice that is dominating his sector. He's gaining new market ground. But the point here is to say there's a human behind this. We need to understand the human. And ultimately, attracting talent is a positioning exercise in the same way that sales and marketing is a positioning exercise. What problem are we solving for this employee? Why does he really want to work for us? People don't just work for money. And I'll give you an example just now. Secondly, through what experience does he want to go in the way that we solve that problem? He wants to have a good experience when he works with you. And so for who specifically, if you do the positioning on your ideal talent, you'll be able to find them more surgically and be able to resonate and connect with them more surgically. The example I want to give is I'm at the moment dealing with a technology accelerator in Cape Town. It's a wonderful business run by an individual that is, by all measure, an absolute genius. He's a mind-blowing person. And he has on his team approximately 20 engineers, and these guys are some of the brightest engineers on the continent. They all should and could be working with SpaceX, and the truth is some of them have consulted with SpaceX in the past. That's how smart they are. Yet for some reason, they choose to work for a South African small business at probably about a tenth of the salary they could reach if they were working for SpaceX. And so why is that? And the point is, yes, people want to be paid well, and these guys are still paid very well, but money is not the only driving factor. So you don't need to sweat too much about that. In this particular case, these engineers at this business get a sandbox, a level of autonomy and a level of technology support that they might not necessarily, surprisingly, get at SpaceX. At SpaceX, they would be a number and they'd be driven to their end. And they feel in this environment, at this business, they're able to achieve their real potential. So this business owner has created the kind of environment that allow them to really flourish. And that's getting positioning right. Now you will track the winners. I just want to get back to this industry size. 30 billion rand, that's a fair amount of revenue available for the taking, and it makes you think of the growth opportunity out there. Too often we deal with business owners, and we see this at Aurik again and again. The guys are stagnating and they'll say, it's the economy. My clients aren't growing, so I can't grow, or it's Eskom. Those are stupid excuses. It's probably not the right word or fair word to use, but they're silly excuses. In a 13 billion rand market, what's your market share? If your market share is 0.1%, 0.05%, there's so much room for you to grow by eating away at your competitor's lunch. We can always grow by eating away at our competitor's lunch, even if the broader industry is shrinking. So that's exciting. And your success in doing that is determined by how well you've structured the commercial organs, the commercial function of the business to pull together towards a clear, exciting future destination. And that structure at Aurik, we've coined a term for it. We call it an asset of value. So an asset of value is a business with 5 characteristics which makes it such a dream to own and operate and grow and scale and one day have options for a really wonderful exit or succession. And the first and foremost of these, the foundation, as we said earlier, is the positioning. What makes you special in the eyes of your customers? You never want to end up just competing on price and on quality and on service. Anyone can undercut you in price, becomes a race to the bottom. That's horrible. Anyone can invest in good service and good quality. Those 3 things, while important, just keeps you sort of head above the water. You're competing incrementally. But if you get your positioning crystal clear and relevant, then that's when your customers or your clients say, we only want to work with this company because they get us like no one else. Now, once you get your positioning clear, you need the engine to harness that potential. And we call it the systems of delivery. So how do you achieve consistent, reliable experiences no matter what level of scale the business reaches? And a really good way to describe this is it's the activities that are happening in the right sequence to get the successful outcome that you're looking for in that given area of the business. And they're measurable and they're teachable. Now, when you've got the systems that's going to harness on this positioning where all your growth will come from, you need a purposeful team to drive those systems. Most difficult thing at the moment. How do you find these guys? How do you recruit and train them and hold them accountable? And with an asset of value, the business is built in such a way that no matter what level of scale you reach, it's always really easy for you as the captain or the owner to see that the right people are doing the right thing at the right time. Now, here's the real joy. To the extent that you get these 3 elements in place in a business, that's what releases your time. Gives you more time on the bridge of the ship as opposed to be running around in the engine room. And with more time, what does one want to do? Well, who doesn't want to reach the true potential of the business? So we're talking about exciting next level growth. So you've got to be able to hold that positioning, not get steered off course. You want to leverage those systems of delivery and it must be led and implemented by your team. You can't do all of that yourself. And then the final layer is speaking directly to the value of the business. Guys, as I said earlier, 94.6% of businesses fail to exit at the end of the day. They essentially close down or they sell the assets at a discounted rate. It's not a happy ending. And so one needs to say today, what are the levers that a potential buyer will use 2 years or 20 years from now when I want to exit? That will determine how the multiple is pushed up or how the multiple is diminished. And let's do that proactively, because the sooner you plant that tree, the faster it's going to grow to a wonderful, big, sizable tree, and the more the compound effect will be on the valuation that you will reach for your business when you exit. And along the way, it will be more joyful to own this business and to operate it. Right, so that's the framework for a good business that can grow really well and that can scale. But now I want to bring this all back to you guys. I mentioned earlier that client lifetime value is somewhere where we can directly help you guys. And so a simple, wonderful truth is if your clients' businesses grow, your businesses grow by default. If not, you've been missing out. You've been missing a trick. And that's because as they grow, they need more of your services and they need more of that in greater quantities, more often. Aurik happens to be really good at growing businesses. On average, as I said, we've seen growth rates on our clients of about 28.9% in revenue, 32.4% in EBITDA. And for that reason, we found really valuable over the years to partner specifically with accountants and brokers across SA. As we work with their clients and their clients grow, the demand for your services increase. So what does that look like? Well, really important to mention here, we're not accountants, we're not bookkeepers, we're not financial and tax advisors. Those are the things you guys are the pros at, and we leave that to you. Aurik gets involved with the operational and the commercial organs of the business. How do we actually sell? How do we actually get our operations efficient? And as we work with those businesses and we get that right, the business grows. They need more of your services. And here's another thing that we get really right. And actually, I can ask Mishka, you don't need to answer this. It's a rhetorical question, but how often are you frustrated with clients who ask for management accounts, but they don't even look at them, or they don't understand the management accounts, or they see the annual financials as a compliance exercise? They have no idea what's going on. But as an accounting professional, you can look at that and you see there's gold in there. They can be doing so much better if they actually meaningfully engage with you on those documents. And you're willing and you're wanting to help them make use of that, but they don't do it. What happens if we work with a business is they start to smarten up and they work better with their accountants, they engage, they ask questions, they look at their management accounts once a month and they get really good value out of their financials. So your clients become more of a joy to work with you and you can really, really deliver value to them. So what did the partnership look like? And let me skip this column. I want to actually jump to the second column. This is where it gets interesting. These are the results of businesses that have referred to us by businesses like yours, by firms like yours. Over a 2-year period, as we worked with these businesses, their assets have grown at 59%, employees 22%, revenue 66%, profit by 75% over a 2-year period, and insurance by 70%. So just imagine for a second, what would it look like if your client book grows by 66% over the next 2 years? What would that mean to your business? Now, if Aurik works the business, those are the kind of results we get. And that all happens without much heavy lifting from your side. You've just made an introduction and to introduce them to a potential partner that can add value. And actually, let me take that away. I want to explain the first column as well. Of course, if any of your clients has any of these main issues that we solve and we have a coffee with them and we can actually work with them and they start working with us, we always very happily offer you guys a referral thank you fee of about 12,000 Rand per given client. And yes, that's not the big value. The value is in the growth that you'll see over 2 years and how that will impact the growth of your book. But some of our partners say, guys, thank you, but we don't actually need that, or we don't want that referral fee. And what we often do then is say, guys, no problem, let's put that into a marketing budget. And let's once a year or twice a year do an event together. Let's invite some of our clients and you invite some of your clients and we get them to meet each other. And there's always new business that comes out of that for both of us. So how does an introduction look like? It's really simple. You just send an email or a WhatsApp and you say, Thomas, meet Ruan, or Thomas, meet Johan, or meet Mornay. Have a coffee with Aurik. I have a suspicion they can really help you with these things that you're trying to solve. And that's all. So that brings about to the end of what I wanted to share with you guys. And to summarize this, it's to me personally frustrating when professional services firms think that phishing is enough. Yes, you can have a website and you can throw out a net and hope they will swim into the net, but it doesn't put all the control in your hands. You have to sort of take what you can get then. You'll have some tunas and you also have some sardines and you'll have some crayfish and some slugs. And that's not always a dream. Fishing is good, but the accounting firms that are winning are becoming really good at developing their hunting muscles. They've bought a spear gun and they know exactly what time and what current the tuna will swim by, and they can go and hunt those tunas, the ones they really want to work with, and less of the slugs. And so you can hunt and you should be hunting. The other accounting practices are doing it. If you're not, you're missing out. And the second thing I want to leave you guys with is there's always an opportunity for us, and some of your clients do struggle with these issues, to have a coffee with them. If we see we can have an impact, then it makes sense for us to work with them. And if we can work with them, by means of that business growing, they'll need more of your accounting services, and which means your book and your value grows as well. And that's about all of it. So I'll